Sure. So I'll start as a brief intro, right?
Yeah.
Okay, cool. So my name is Adrian Link. I'm actually based in Houston. I met Mars through David, a mutual friend. But just talking about, today we'll be talking about crypto. Me specifically, I started in crypto back in 2012. That was like the first or the second major price increase. And ever since there, I've been just kind of hooked on it. But yeah, during that time, I kind of saw it go up from like a couple $100s to $1,200. And at that time, I was buying at the dip, at the peak. So I was buying like at $800, $900 and it crashed. But yeah, that's just a little bit about me, and we're gonna talk about.
True. Yeah, no, bro. I mean, yeah, hearing that you started at 2012 is some crazy time. Because I remember when I saw it, I was at 2017, bro. It was like a long time,
But
yeah.
I mean, you gotta understand also, like at that time, it was so, underground. The way I heard about it was a friend from high school that he lives in Australia, and he worked in like security and stuff like that and he told me that, hey, people are using this to buy drugs online. So I don't know if anybody remembers Silk Road, but basically the platform where you go into the dark web and then you can buy drugs with it. So people are using that Bitcoin to buy drugs, fake passports, fake money, all this stuff online. So I just looked into it. When I looked into it, it was like 120, 130, and I didn't think anything about it. Then it started going up to like 200. I was like, maybe I should put some money on this. And then it was Coinbase, right? I created an account, and then the only way you could buy is through, put in your bank account information. And I just didn't trust it, which is funny because now Coinbase is like a publicly listed company. But at that point, my bank information here, and that, I definitely regretted that. But yeah, it was different times back in 2012.
True. Yeah. Dang. Yeah. No, I remember because when I heard about it, it was 2017. A friend of mine was buying Omise Go because supposedly he said that was gonna be like the coin that would be the most useful because it was for gaming and stuff like that. So I was like, all right, I'll go for it. And he showed us where he was buying it through Coinbase and stuff like that. At that time, I think it was like $3,000, $4,000 a coin. And yeah, we decided, I was like, okay, you know what? I'll start with like $10. And I made the Coinbase account, started putting $10 in. And I saw that $10 became 15 in a couple of weeks. I said, all right. And then a couple after that, it was like 25. And it started going up. And I think the hype and everybody started talking about it. Like I saw a Netflix documentary about Bitcoin to talk about how it's starting to become, a lot of people are trying to make it more legit. Because and this is why, Charlie Munger and Warren Buffett have such a big issue with this, because it started in Silk Road and it became known as the dark web money. But in my opinion, it started that way because there was no one else that could like understand it. Like the only people that understand were people that were actually able to hack into things, hack into the internet, look at stuff and be able to do things without so much supervision. And not that many people aside from tech geeks and cybersecurity people like could do that, could actually access the dark web. And yeah, it became a crazy mode of exchange for the criminals, and it started that way. But I think now we're starting to see the benefits of the blockchain, and yeah. And when I decided, bro, it was I regret not putting a lot more money back then, but I think now we're starting to see the actual potential that it has for the future.
I mean, hindsight is 2020, right? So
yeah, true.
Can I say something?
Sure. Go for it, Jason.
I first invested in crypto last month. I bought it at 0.26. I invested 100, and then I saw those 100 go up to like 270.
Yeah, and that
And
was
then yeah, that was on April 15 when I invested 100.
yeah,
Because before 2 days before, I think it had been at 0.09. So then I took the risk and I put 100, and then I saw those 100 be 270. But then
yeah,
I got scared that it was going down to 0.54, so I sold half of it and took the profits and kept that right there. Because I wasn't sure to sell all or just
mm,
sell half of it. But then like someone said, just take the profits. So I just left what I invested and took the profits.
yeah. No, that's perfect. That's pretty much like the way to do it. Because I mean, depends also on the coin you were doing. Because there are some coins, that are long-term holds that everybody's gonna be thinking about investing in for the long term. But if it's something like Doge, yeah, I think that's the best approach.
Yeah, the Dogecoin, yeah. And then so I take out, was it $85 in profit? So I'm like, wait, should I leave them there and then reinvest it? But then I'm not gonna see that money if I reinvest it. But then like I wasn't really sure, so I just took it out and then just transferred out. So
Yeah,
all of this is like learning as I go. So then I know that you guys, when you guys started, weren't like that familiar or anything. Like everything's learning as you go.
yeah,
Exactly.
Yeah, but
pretty
I
much.
was also I was also scared, so I just started with the 100.
Yeah, yeah,
I was like, instead of buying books, I'm like putting the 100 on Dogecoin.
true.
Yeah,
Yeah.
I have a theory that, in order to be successful with like investing or trading in crypto, you need to get burned really bad at least once and then get it out of your system. Because then the next happens and you won't be scared anymore. Like whenever it dropped, like a month ago in April, I think Bitcoin dropped from like 63, 64,000 all the way down to 47,000. Everybody was freaking out. It's like, oh my God, is this big? Is this going to zero? What's going on? And at that point, I was buying. It's like this is normal for the market to
Mhm.
during this.
So the other thing that I thought I heard that I shouldn't be like scared because I bought it at 0.26 and it was at 0.54. So at least like I'm making from 0.26 to 0.54 something. I don't know
Mhm.
where I read
Yeah,
it online, and then I'm like, oh yeah, that's a point. So a good point. So I think I'm not gonna sell all of it because I was getting scared that it was gonna go down. But like, wait, I shouldn't be scared. I bought it at 0.26, and now it's at 0.54. So I
yeah,
just sold. I just sold like I just took out the profits.
yeah, yeah. No, that's very good actually. Yeah,
Yeah,
no, that's
especially with something like Doge. Because so I mean the kind of like the big two are like in stocks you have your blue chip stocks, right? So you have the big companies are more or less safe from an investment standpoint or safer relative to other stocks. Same in crypto, right? So Bitcoin, it holds half of the total crypto market cap, right? So it's basically the blue chip, and then the second one obviously is Ethereum, which is also like in terms of market cap much more valuable than most other coins. So for those, even if it drops, I'm still holding. I mean, I have my strategy, and we can talk about that a little bit later. But for something like Doge, it's more volatile, and especially if it has gone up so much so fast, it could easily go back down really fast too. So I think that's a great approach. Take your profits. At least take the money that you put in, and then you're still exposed to the upside risk, right? Or the upside benefit if it does go up, and then if it goes down, you're still in the green.
yeah. No, I think one of the things that we can talk on now, which is like how Bitcoin changed from being just a currency to a store of value, right? How become almost as valuable as gold and gained so much value through people believing on it as an inflationary precaution. And I don't know, Adrian, would you like to talk about how Bitcoin came to be? My cat is out here trying to be a crypto investor as well.
Sure. So I think, I mean, crypto is actually or Bitcoin is actually the first ever cryptocurrency. And I don't know if everybody knows that. It's not as obvious right now because there's so many like different cryptocurrencies out there, being pushed in the media and, in Telegram groups and whatnot. But, and the way it got started is kind of crazy. So it was first created in 2009 by Satoshi Nakamoto. Now, nobody knows who this guy is or if it's a person, a group of people. Nobody knows who it is, right? It was just some guy in the internet, and he would post on like Bitcoin forums or cryptography forums about this project that he's working on, and then there were other people that helped him and so on. So this was back in 2009, and the motivation behind creating Bitcoin is after the financial collapse of 2008, 2009, this guy, Satoshi Nakamoto, where he thought that there needs to be something where we're not relying, or the system's not relying on, a group of individuals that have so much concentrated power with your money, right? So the idea was to create kind of like a cash equivalent that could be transacted in a way that didn't require banks, or it didn't require any third parties, and it wasn't susceptible to government regulation, right? Because Bitcoin, any government can ban Bitcoin, quote unquote, but how are they going to ban it? If you have your Bitcoin in your wallet, they literally can't take it from you, and you can still transact in it and so on. So that was the motivation behind it. And at that point, I mean, at some point it went into exchanges where it was just pennies for a Bitcoin, which is just crazy right now. There's kind of like a meme. I forget what the exact date, but there's a Bitcoin Pizza Day. And on that day, it was the first like publicly known transaction of Bitcoin for an actual good or service. So somebody, I think it was either somebody from the US and then somebody from the UK did it, like the transaction. But essentially what happened is one guy said, hey, I have 10,000 Bitcoins. I want a pizza delivered to my house. And then somebody's like, okay, yeah, somebody ordered pizza, paid for the pizza, and then got it delivered to that guy. And then the other guy sent the Bitcoin. So he paid 10,000 Bitcoins for, I think it was two large pizzas, which in today's price is what? Is that like 6 billion?
Yeah, they call it the most expensive pizza that would ever be in the world.
Or 600, yeah. I mean, if you assume a price of Bitcoin is 60,000, that'll be $600 million for those two pizzas.
Wow.
But yeah, and then like Morris said, after that, it kind of people started to see the value of being able to transact without going through banks or any other financial organizations. And obviously criminals and hackers and whatnot, they start using it, and it started gaining steam, right? And then from there, I mean, the most I guess popular exchange when it first started, it was actually Mt. Gox. I don't know if anybody's heard of that, but Mt. Gox initially started as a trading exchange for Magic the Gathering cards. And then eventually people started trading with Bitcoin, and then that became the focus in it. And then it grew to the point where it actually collapsed. And then the CEO of it, I don't know if he's in jail or not, but he got charged with like fraud and all these other things. And a lot of people lost their money because it was sitting on, they had money sitting on that exchange, and then they basically didn't have the money that they said they did.
Yeah. No, I remember hearing that story too, and seeing the news as well, because at that time I think, that's one of the biggest crashes that the Bitcoin had at the time. I think it went almost to less than 1,000, right, at that time.
Well,
and it was in a few thousand.
It peaked around like 1,200 when the whole collapse happened, and then it went down. I mean, eventually it went down to like $200, I think. That's low. probably even.
Yeah. Yeah. No, and I remember all of that. And I was like, what is this Bitcoin thing? And I heard that, and I started, looking into it, like hearing about it, but I never put any attention. It was one of those things, that the news would talk about, but it was like maybe 5 seconds. And like, yeah, this person that deal with Bitcoin got incarcerated today, and it seems like he's gonna spend a lot of time in jail because of using internet money and laundering all this money from people.
Yeah.
And that was it. That was the whole story.
Yeah, and
5 seconds.
what's crazy is just thinking about it now, because that's when I first started buying, right? It went to 1,200,000, then it started going down, and it's like, oh, it's got to come back up, right? But now going down and down and down, buying like all the way down, which that's my first burn of crypto, which again you have to get your system to be successful.
Yes.
But the weird thing, because I was in like these Reddit groups and whatnot, and people will get so excited if Bitcoin even got mentioned once, like just the word Bitcoin in the news, right? It was like a big deal. Like, oh my God, they mentioned that. I mean, now everybody's talking about Bitcoin this, Bitcoin that, and you have people, Elon Musk talking about Bitcoin. Everybody's he's buying Bitcoin. At that point, just having the word Bitcoin being mentioned in the news was just crazy.
Yeah. No, and I think that's when I started, getting into it. And then, the whole BitConnect happened, and then people got scared of it all over again. And it's just a cycle. And just like how you said, you have to get burned, at least in crypto, because I think, yeah, you have a lot more protections when it comes to stocks, but in crypto, you pretty much is every man's for himself. And that's how it was back in the day, where you put your money, you don't know who it was. Well, your money is gone. And if they took off with it, that's it. You cannot get it back. And yeah, I think there's like a rite of passage for every crypto or investor, that they thought they bought at a good time, but it was at the top. And then, it crashed all the way, maybe 80% of their money. And that's how it was with me when the BitConnect thing happened. I think at that time, and that was back in 2017, I think it was 20,000. I was buying Bitcoin at 1,800, at 1,500, but of course not a whole coin, because that's a lot of money. But like maybe $200 here, $200 there, 100 there, at a current price of 18, 16, close to 20. And then you reach 20, and I was, I'm gonna be a millionaire when this comes up. Boom, Bitcoin happened. The whole world started hearing about Bitcoin, and Bitcoin crashed. And yeah, it burned. It burned for sure.
For me, like I've been lucky when I've been buying, because I bought the Ethereum Classic last month at $24, and now it's like
Nice.
126. So I've been lucky. The times I invested, like a couple of days later, it goes up. So with the Dogecoin and then the Ethereum Classic. But also when I was first investing with the Sundial Grow or something like that. I don't remember what it's called.
Sundial Growers.
Yeah, I invested like
Growers.
yeah, I think it was $3, and then it went up to like, I bought it at $1, and then it went up to like $3. But I wasn't keeping up like with the like how much it was going up, because I was busy with school. So I'm like, I shouldn't have sold, like just take the profits from there. But I saw when it was already going down. So I didn't want to do that mistake. So I was scared for the Dogecoin. So I just took the profits.
Yeah.
So everything for me has been learning as I go. But I've been lucky that when I invest, the little I invest, it grows like a couple of days. I don't know if it's luck or something.
If I can add to the story regarding Sundial Growers, a friend of mine actually invested when he started seeing that it went from $1 to $3, and so I think he bought it at $3, thinking it would go higher. And if you guys have looked at it recently, it went down a lot. So there's a possibility of that happening as well.
No, and definitely. I mean, it's great that a lot of people are making a lot of money, but sometimes, we forget the story that when someone wins, somebody else loses. And most of the time, especially with crypto and with stocks, the majority of people are losing when it comes to these uh, it's pretty much on they call it unfundamental investing, when you just invest depending on what other people are saying or what you hear in the news or what you hear on the internet. And that's when people get burned, because everybody talks about the person that made 100,000, but they don't talk about the 100,000 people that lost it all. And that's a danger, and that's what people get scared of when it comes to investing in crypto, because you don't know what could happen. But I mean, at least our goal here, and why Adrian and I, wanted to talk to you guys about, is to make this fundamental investing strategies where you guys can go into a good, reputable exchange, make the purchase, and be able to also, aside from just having the coin, also earn on that coin. So you can make interest on that while you hold and you wait for the good times of that coin to come back again. It could be that you bought at the top and then it crashes a little bit, but with this strategy, you at least will be protected some way. You'll earn some money, and at the same time, you'll hold for the future, because I think that's what crypto is. Our future is bright. It's becoming way more accepted, and everybody's starting to feel like, okay, I should start putting in money in Bitcoin, because we're seeing the advantages that it has compared to the current monetary system, to the current currencies that we're dealing with, and how the government is messing them up and causing all this inflation. And yeah, Adrian, would you like to talk about these exchanges and difference between them, and also the wallets and stuff?
Yeah. So let me share my screen here. So, well, before we dive into that, let's just talk about, my idea of, for example, if somebody asked me, hey, should I invest in crypto? And so, like, what should I buy? So, as I mentioned before about, the blue chip coins are your Bitcoin and then Ethereum. So let's say if I had $100 to invest, I would put, $40 on Bitcoin, $40 on Ethereum, and then the $20, you can do your own research on whatever smaller coins you find attractive. But I think Bitcoin and Ethereum are a must in terms of having your majority portfolio when you're talking about crypto. You have to. I mean, they're basically the drivers of the whole market. So whatever goes up, it's probably because Bitcoin has gone up too. But let's talk about where and how to invest in. So let me share my screen here. Can you see my screen?
Yeah.
Okay. So I personally just buy from Coinbase, and ever since I got into crypto, I'm buying from Coinbase. So Coinbase is good, a good starting place, because it's an easy to use platform. It's fairly straightforward to sign up, and it's popular and safe, right? It's the only crypto exchange that's listed publicly in the stock market. So that should give you some confidence in terms of the safety of your funds and whatnot. So I would still recommend Coinbase as a place to buy a crypto. And then, I mean, there's a bunch of other places that you can buy crypto from. There's Uphold and Morris. I think we can share with them all the links to the different platforms later.
Yeah.
But there's a bunch of other places. But what I want to talk here about are the places, the platforms where you can actually earn interest on your crypto. Right. So just like a savings account, or back in the day, if you did an online savings account, you were getting like 1%, 1.5% or whatnot. The same thing, except it's with crypto. So the first one we're looking at is BlockFi. So BlockFi is actually, they're backed by Gemini, who are the Winklevoss twins. They back it. And it's one of the biggest platforms like these. So I consider it to be pretty safe. One thing to note, that if you have money in a savings account or a checkings account, it is insured by the government, essentially up to $250,000 per account. That's the only risk that you run here, because these accounts they don't have that same level of insurance, right? So just making that clear. And the likelihood that something might happen, it's very, very, very small. Like, I'm not even concerned about it, but it is a possibility, and maybe a black swan event, who knows, right? But essentially what you do is, and you can also buy directly from your bank account on BlockFi. So if you didn't want to go through Coinbase, you can also buy on BlockFi. But essentially what you do is you either send your Bitcoin, Ethereum, whatever crypto to BlockFi, to their wallet, and then you start basically earning interest on that. So here we're looking at their rates, and they just lowered their rates. They used to be higher than this, but if you have between 0 and 0.5 Bitcoin, you'll be earning 5% interest on that. So that's APY, and they pay it out every month, right? And then you have the same amounts for all the different cryptos that they offer. They only do Bitcoin, Ethereum, Litecoin. That's pretty much in terms. They also do Pax Gold, which is kind of like a crypto version of gold. So they're in terms of the crypto that they actually offer, but their interest rates are pretty good, and it's a safe platform. And then you have other platforms. My second favorite, actually, Celsius. I just moved a lot of my crypto from BlockFi to Celsius because it changed the interest that you were earning on that. But Celsius, it's a very similar platform. You put in your crypto into your Celsius account, and then you start getting paid. And they actually pay out weekly. So even that, about compounding, right? So if you're getting paid weekly, you start to earn interest on your interest. So, during the past 2 years, I was buying crypto and then I was holding it there. So not only was I, buying crypto, but then my crypto was also earning me crypto as well. And, given that with the compound interest and the increases in price, that's a really good return. But anyways, and these platforms are good if, for example, you don't want to trade. Let's say, you want to buy some Bitcoin, some Ethereum, and they're going to go up, but you don't want to be day trading. You don't want to constantly be looking at the market. This is a good alternative, right? You just leave it there for a long time. It's, it earns you 5%, 4%, 6% APY, which is, the average return of the S&P 500 over the past 30 years is 7%, right? So you're almost getting that risk-free, minus the platform going under, something crazy like that, which is unlikely. But it's a pretty good return when you compare it to other asset classes like stocks. So same thing here, Ethereum. Celsius actually has a bit more coins that you can earn interest on. So that's why I like them. And they're pretty good. Another thing to note, Celsius doesn't charge any withdrawal fees, and they have no limits on how many times you can withdraw per month. BlockFi gives you one withdrawal a month of your crypto. So that's another thing to keep in mind. And then the next one, these are kind of my top three. And then between these three, whatever crypto you have, as long as it's not a unknown crypto, you're probably are going to be able to earn interest on whatever coin you have. So the Nexo is another platform very similar to Celsius and BlockFi, where you also earn interest on your crypto, and they actually pay it out daily. So BlockFi is monthly, Celsius is weekly, and Nexo they pay out daily. Usually they have their interest rates are a little lower, but it's still a good platform, and it's good to have a little bit in all three and spread your risk around just in case, just to protect yourself. So I think I'll pause there and then see if there's any questions or any comments. Or more is anything. And
No, and just like pretty much like just how you mentioned, you want to limit your risk. If you're a person, that definitely needs that money in the short term, and you are somebody, who is a little bit more new to crypto, this is the easiest way to invest. So um, put your money in different platforms in order to make sure, and if for some reason, Bitcoin does crash, and like we pretty much like I said in every single meeting, this is not financial advice, it's our opinion that we're giving. It's all you decide to where to put your money at the end. But if Bitcoin does crash, you at least have 3 platforms where you can sell your Bitcoin or have your Bitcoin chilling until that moment. But just like pretty much Adrian just mentioned, at the point where we are in cryptocurrencies, where companies are investing a lot of money in crypto, the government is thinking about investing in crypto, banks are pretty much trying to find a way to provide crypto as a security in their bank accounts, either to wealthy customers or just to everyday account holders. The likelihood of crypto pretty much crashing at this point is very, well, maybe not crypto, but Bitcoin, Ethereum, these coins, at least these two, the likelihood of these two to crash are very slim. Then of course, if you have Doge or these other ones out there like Hadera or these ones, that are not well known and people are, not putting their money into it, or the adoption is way slower than it is with Bitcoin and Ethereum, then the risk there is higher. But definitely you want to diversify, not have everything in just one point, one location. And if you do this, you at least put yourself in a better position than mostly that everybody that's investing in Robinhood. Because there's a big difference between investing in crypto in Robinhood compared to these platforms. And I don't know if you want to explain the difference between what a wallet is and then what Robinhood is doing with crypto in there, Adrian.
Sure. Yeah. So in crypto, you have your wallets, which just think about it like an email address, right? You have an email address, you can send emails, you can receive emails. So it's the same concept, except, it's a bunch of numbers and letters, and that's kind of like your public address. So that will be like your email that you give everybody, right? And then you have your private key, which is basically your password to that wallet. So that'll be equivalent to the password to your email. And then you can access your email, and you can see all your transactions. You can see, you can send transactions and so on. So there's a common saying that goes, not your keys, not your crypto. And what that's referring to is that if you don't have access to that private key, that password to your crypto balance, you basically don't necessarily own the coins, but rather somebody owns it on behalf of you. So when you go on Robinhood, right, and you buy Doge or you buy Bitcoin, you buy Ethereum, you see it in your account, right? You have 0.5 Bitcoin or whatever it may be, right? But if you wanted to send that to somebody else, you can't do that because it's just there as an investment and not necessarily the actual coin itself, right? So when they refer to that as not your keys, not your crypto, that's what they're talking about. On the other hand, if let's say you buy Bitcoin from Coinbase, you actually have the crypto and then you can actually send it to a wallet. So there, I think to simplify it, there's like 3 different types. So Robinhood, it just basically, they tell you, hey, you own this much, but you can send it, you can't receive any, right? So that's one. That's kind of like the least ownership you can have in crypto. The second one is having it on an exchange like Coinbase, where you can't send, you can't receive crypto, but the exchange still holds the keys, the private keys, or the password to your coins, right? And then the most direct way of holding any type of cryptocurrency is to have a wallet. So this could be a wallet. Usually it's an app on your phone or even a desktop. There's also hardware wallets, which is basically a device that stores all that private information about your wallet. And then you're able to transact using that device. So those are kind of like the most direct ways that you can actually hold cryptocurrency. And the idea behind that is that you reduce your risk. You know, if an exchange goes under, or you know, the U.S. government for some reason they want to go into your investment account and freeze your assets or whatever, you're basically avoiding all those risks by just holding your coins. And that's something nobody in the world can take away from you, right? Unless you give them that private key. So that's why if you have your private keys, that's the most secure way of holding on to your crypto.
Yeah, and you want to protect those keys because there's a lot of people out there, and this is especially back in the days, it was a very rampant form of scamming where people would say, "Oh, if you give me your crypto wallet, I'll send you free Bitcoin or free Ethereum." And believe it or not, many people would do it. They would send them their crypto wallet information.
I got a story on that, Morris. Because I in 2017 I got scammed because I was too rich. So what happened to me? There was this site called btctrades.com, and they basically had this thing where you had these different packages. So you had the silver package, you have the gold package, and the platinum package. So the idea was that there's some type of like investment, you know, trading people, and then they just needed capital. You give them the capital, and then they give you returns. So they were promising, like, you know, for the silver, I think it was like 25% a day. For the gold, 50, and then for the platinum, it was like 100% a day, which is just ridiculous, right? I didn't believe it at first, but then a friend of a friend, actually Christian, is the one that brought this up. He mentioned to my friend, I was like, no, that's a scam. That's a scam.
Why I'm not surprised, bro.
but here's why I got into it. And, you know, Dave's play with psychology. So he showed me, like, no, like, look, I got my percentage back. So this guy actually got back like 50% of the initial investment back. And it's like, damn, that's crazy. So I tried it, right? I forgot how much I sent. I mean, it's probably worth like, you know, tens of thousands of dollars at this point. But in any case, so I sent it, and then, you know, I got back my initial investment plus the return. So I was like, oh. And at first it was like a smaller amount just to try it out. It's like, I got excited. I was like, I got greedy. It's like, oh man, if I do this, I'm going to be a billionaire in like, 3 months. Right. So it's like, okay, I'm going to do it more. So I send it. It's like, okay, great. And then that's where like the scam happens, right? Then they're like, oh no, we need this document. We need this tax document. The IRS needs this to release your funds. And they basically just take your money and that's it. You just get scammed. So yeah, that's a very, very thing, especially with crypto. There's a lot of scammers out there. So never share your private key with anybody.
Wait, how does it work when you like your earnings, or like with Robinhood, like, or other like apps, other platforms, like reporting your earnings when like doing income tax or stuff like that?
So most of them, I know BlockFi and Celsius do this, but most of them, they have a limit. And I don't know if this is dictated by the IRS or not. But if you do more than $20,000 in volume, they're actually going to report that to the IRS. And then they're going to give you, I think it's I forget what form, but they give you a form, a tax form at the end of the year if you go above that. But in any case, you have to report your taxes every transaction you make where you convert, well, every sell that you make where you convert crypto to US dollars or to other cryptos, it's a taxable event. So
because for me, like right now, I'm just a student, I'm not working, and I have Robinhood, but like, wait, how does that gonna work out for me?
with Robinhood, it's a bit easier because they prepare all that stuff for you. So in next year, January, February, they'll send you like a tax statement, a tax form, and they're pretty easy because they also do stocks. So they already.
So then, even though if I'm not working right now and then I'm using Robinhood, I still have to report it eventually, or not.
Yeah, that's pretty much the Robin. I mean, being unemployed won't prevent you from paying. But it could give you a really good return in the discounts of your taxes. But every single capital gains, no matter if you're working, employed, self-employed, or you have your own business, you have to report all your gains. And then you can figure out, what kind of deductions you get from the IRS. Of course, that's depending on every single situation. So your case will be very unique. But yeah, you have to report your
So then the
gains.
$85, I will have to report them.
Yeah, if pretty much you sell right now and you get those $85 in your power, like back in your as cash, you have to report those $85 gains.
When making taxes, right?
Yeah, at the end, once you're done.
Yeah, but
pretty much.
since I'm not working and I'm like, I can't make taxes because
Ah,
I can't report them because I'm not making taxes. Is that what I'm saying?
Got it. Okay. Yeah, I would say talk to your tax advisor or any
Yeah.
other person you have in that case, because yeah, that's a very unique situation.
Yeah.
Yeah, because I'm
Yeah,
like, I don't want later on like being like, oh, you shouldn't have reported. I didn't know I'm like, yeah. So that's what I was wondering.
I mean, yeah, you should always report taxes. I'm just gonna say that there are times in the past when I was a student or trade, and yeah, I didn't have to file taxes with I didn't, and like nobody knew about
Also,
it because there were small amounts, but sorry.
oh, I'm so sorry. I didn't mean to interrupt you, but
No,
just
no
like
worries.
I wanted to butt in real quick because for my profession, I look at taxes on a daily basis, and a lot of it involves assessing whether or not somebody is required to file. I wouldn't let the fear of having to pay out taxes prevent you from filing, Jason, for one of two scenarios. So one, you definitely don't want to be in the position where you're randomly audited by the IRS. And then you have to retroactively go back, because then in addition to filing taxes, there's a late fee that's assessed. So you don't want to go through that. And secondarily, because you weren't working or filing taxes, really that $85, don't be scared of that. I really don't think that you're going to be penalized for that quantity, especially seeing that there's no other income coming your way. I think usually it's like when you fall into higher categories of income, that you end up having to shell out a few, but really I would just move forward with filing, just my personal opinion. Additionally, because you're a student, and this is something that I honestly I wish I would have looked into it, because I didn't make very much money as a student, and I didn't file out of the fear that so and so told me, hey, you're gonna have to pay taxes, right? Even though I wasn't required to file because I made under the threshold. But looking back now and knowing what I know now, I missed out on a good refund, because I was scared. And also the IRS regulations are, I think it's public knowledge, so you can always look them up and just compare your situation. But yeah, just wanted to butt in on that.
Yeah, it's sometimes like like you don't know what to do, so you might wonder, oh, well, like just not like the not knowing what to do, like the lack of information for the person of not having it, like what to do.
No, I can completely agree. Can be a little scary.
Because for me, like we went to this new woman with this lady, and then she told us like, do you get the form you get from the school? I'm like, I didn't even know about that. So I all this time I had it like the electronic version, so I never got in the mail until I transferred to Long Beach, and that's when I got the form. Like, oh, that's like $1,000 from the American Dream or American Credit for Student. I was like, that's something I missed all these years because the other person never told us nothing about it.
Yeah, the 1098-T form is definitely
Yeah.
not public knowledge for everybody, but it does help out a lot. And that's just the fear of like the unknown, but that's a good thing about having these
I didn't
conversations.
know about that.
Mhm.
And then that's like 1,000 that my mom would have got and help out for me to school to pay for stuff or certain things. The times I was struggling and her, like that money would have been helpful, but no one told us that. So all like you learn all of this as you go.
Yeah, I would suggest you also change tax advisor, because that person did not give you the good advice.
No, this new person, like, oh yes, like she's very helpful. Like she's like, that's how she told us about it, and oh, we didn't know that.
Okay, that's good. Yeah, as long as you find somebody that can guide you, because I mean, taxes are some of the hardest things to do, and the crazy thing is like the American educational system doesn't teach us how to do it,
And
then we
then
grow
we
up
also learned
without
that the
knowing.
person did our taxes wrong. My mom's taxes for the past 2 years. So we had to do the amend thing.
Yeah.
So yeah, they fixed them up and everything. So other person was not doing anything.
Yeah, no, but that's good that you were able to find somebody that can help you for sure, Jason. Because yeah,
Yeah.
it's a very delicate situation when the IRS gets involved.
You don't want to mess with the IRS.
Yeah. But yeah, I mean, another thing. So now that we pretty much talk about how, and you've seen the different type of exchanges and the where you can earn and how you can store your crypto. Where is crypto going now? And that's the question that a lot of people have. Actually, I have it. Adrian has it. And the good thing is that we see that crypto is becoming more of a mainstream thing, but at the same time, it's not quite there yet. There's still a lot of obstacles. There's still a lot of stuff that is, preventing Bitcoin and Ethereum to become an actual currency that it could be useful on a day-to-day basis. And that's what people wanted Dogecoin to become, and it has some potential, but not really what other coins promise and what other coins actually have in their infrastructure. And I don't know if, Adrian, you want to talk about where Bitcoin and how people are thinking Bitcoin could change by the end of 2021 and beyond, and
Sure.
what our expectations could be.
Sure. Let's so one thing that I want to point out before we go into that is just the different coins. So one tool that's helpful just to navigate the crypto market is this website called CoinMarketCap. So it basically lists all the cryptos, and it's ordered by its market cap. So basically the price of the coin times how many of those coins are in circulation. So one thing to point out, and I mentioned this earlier, so Bitcoin obviously number one, Ethereum number two, mentioned that. But look at the total crypto market cap is at $2.4 trillion, right? Out of that $2.4 trillion, Bitcoin is $1 trillion. So almost half. I mean, it's dropped significantly. But and then Ethereum is almost $500 billion, right? And then you see from 1 to it drops significantly. So it goes down to 100 billion, from almost 500 billion to 100 billion. And then you start seeing this drop very, very fast. So the reason I mentioned that is that these market caps are a good indicator of the amount of risk each coin has, right? For Bitcoin to drop significantly in price, it would have to sell a lot of money. So think about, an asset losing $200 billion in a day. It's very hard to do. Not impossible, but very hard to do. As opposed to an asset, say like Doge, which is $72 billion, losing $20 billion in one day, it's not that difficult. So this website is a good tool just to check the overall crypto market, see where each coin is going up or down, and then also look at the market capitalization of that. And that's the reason why me particular, my portfolio, I try to make it 90% Bitcoin and Ethereum. And then the last 10% are all these different coins that I think are going to do well. So that's why for today, let's just focus on Bitcoin, and maybe if we have time, we'll go into Ethereum. So, and I don't know if you guys are familiar with, these type of charts or not, but we'll walk through. Let me zoom out first so we can see what Bitcoin has done since it got started. Okay. So this chart is basically the whole history of Bitcoin, at least since it was listed publicly in markets, right? So it should actually go back more than 2012, or this is 2011, but this is where the information starts. So this back when it was like $6, under $10, which is crazy. The one thing to point out is that Bitcoin moves in these cycles, right? This you see this peaks, peak here, peak here, peak here, and now we're over here, which is not really a peak yet, right? And there was another peak here, which is not in the chart. So these peaks happen roughly every 4 to 5 years. And the reason they happen is because Bitcoin, so every 10 minutes, at this point, every 10 minutes, 6.5 or 6.25 Bitcoins are mined every 10 minutes, right? And the amount of Bitcoins mined every 10 minutes, it changes over time. So back here, I believe it was 100 Bitcoin every 10 minutes. Then around here, it was 50, and then it drops to 25, 12.5, 6.25, and so on. So every 4 or 5 years, there's an event called the halving. And that's when the supply growth rate of Bitcoin drops in half. So the next one is going to be sometime in 2024, and it'll drop to 3.125, right? So that's the fundamental reason why Bitcoin continues to go up over time, because it's supply and demand. The less supply you have, combined with either the same or more demand, you're going to see the price go up over time. Obviously, markets are not efficient. And because of that, we see this high volatility and this high increase in prices, followed by a very significant drop in the prices. But this is why, for example, for me, I consider Bitcoin to be probably one of the safest bets in terms of investment and trading. And I don't like to do day trading, and even during the week, I don't like doing those type of trades. I focus more on long-term trades that have a higher likelihood of actually, becoming true. So going into the charts, we see these two lines, right? We have the green line and we have the red line. All these lines they're a mathematical formula. They're regression bands, right? So all it's doing is trying to fit as many data points into these lines. And that's to map out the trajectory of Bitcoin's price, given its history. So we try to do it at the bottom, and then we try to do it at the top to time the tops, right? So if we go into this was one of the very first cycles where Bitcoin, went from very low. It was around $10. It had what we call a double peak cycle. So it went from less than $10 to $180, or it peaked around $265. Then it dropped back to $66. Then went sideways for a few months, and then it went all the way back up to $1,200. And then that was the peak of that cycle. And then you notice for the next 3 years or so this was in 2013, end of 2013. For the next 3 years or so, it went down into this green band, and then eventually picked up again in 2017, 4 years later. And then we saw this bump going all the way from $800 to $20,000. So that was a peak in 2017. And then we see the same thing repeating itself. It peaked, and then over the next 3 to 4 years, it just kept going down. Had a little bounce here in 2019, and then down. And then this right here was around March. This was when everything crashed last year, when COVID was just causing havoc. And then now we're repeating the cycle again. So now we see that we're coming back up. And this is what everybody likes to time. It's like, what is the peak, right? So at what point are we going to be here? This model in particular, it tries to measure that, and it could potentially do it, but nobody knows, right? No models are going to tell you exactly where the price is going to go. But most estimates today on Bitcoin, they range from 100,000 to 400, 500,000. Right, so it's such a huge range that nobody knows what it might do. But I personally think that we're still pretty, I wouldn't say we're early, but we're like halfway through the cycle. And if we look at what Bitcoin has done, it went from $10,000 back in September. It peaked in at 65,000 almost. a couple months ago or a month ago. And then ever since there, it just has trended sideways. So we've moved in these band between like 45 and 60,000 for 13 weeks, right? So almost 3 months. So that tells me that we're not at the peak, because if we look back at what happened in previous cycles, there was no sideways movement, right? It just went up, 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 and then it crashed. So a very good sign of the peak is very fast and significant increases in prices that they just happen very, very quickly. So just to give you an idea of, look at this candle, like in 2 weeks or 1, 2, 3, 4, in 4 weeks, it went up 200%, right? So that's like saying Bitcoin from now around 60,000 to $180,000 in a month and a half. So this doesn't look like that, right? And if this was a peak, this would have been the peak, and it would have already come back down, which it hasn't. So I think we have a long way to go in terms of the price of Bitcoin. And this is actually really good to see, because it means that the market has strong support at these levels. So whenever it dropped to 47,000, it was only there for not even an hour, I don't think, because I was trying to buy around those levels, and it was very hard to buy anything under 47,000.
Yeah. Now I remember I tried buying at 45, and I think it touched like 46 for like 1 second, and then it went back to 47, 48. So I ended up getting at 48, 47. But yeah, it was just like this. It was an instant.
Oh, yeah.
The moment that it just dropped. Yeah. And then it kept going up.
Yeah, there's a lot of demand for those prices. So the other thing I want to talk about is to help you guys with, just giving you the tools, and you can use the tools to trade, or just to know that where the market's going. But I'll just share with you what I use to look at the long-term trajectory of Bitcoin, especially as we navigate this cycle. So these lines are moving averages. So this is basically the average price of Bitcoin for different time periods. So this one is the 8-week moving average, and all it does, it takes the previous 8 weeks and gets the average price during those 8 weeks. And the reason is that they're important is because a lot of times they serve as the support for the market. So if we look here, there's the 8 week, this line here. Every time it drops, it comes back to this line, and it doesn't like to go below this line, right? So here we went all the way up and back down, bounced up, back down, up, down, until we drop below it, right? And then when we drop below, it's like, okay, we're going to continue to go down for a bit until we find the next level of support. In this case, this one is a 20-week average. So that's what I see. The 20-week average for me, it's, that's the lowest it could possibly go in the short term. And when I mean short term, I'm talking about 2 weeks. So that's like my downside risk. I'll be very concerned if it goes below this 20-week moving average, which right now it just closed like 2 hours ago, and it's close to almost $50,000. So I'm not concerned if Bitcoin drops to 52, 51,000. I'll be concerned if it goes under 50,000, because that means it's probably going to go even lower than that. So that's a good use of this. And just to make the point on those lines, and why are we using the 8-week versus 10-week or 12-week? It just depends on the cycle. So going back to the previous cycle, the white line here is a 20-week, and then this blue line is the 8-week. So you see the blue line, it really didn't mean anything last cycle, at least not that much, right? Maybe around here. But if you look at the white line, which is a 20-week average, it essentially served as support. So every time we went down, we hit that line, and then we came back up. Then came back all the way down, hit that line, came back up. And then here we got into like the 8-week moving average. So we found that level of support there. But let's go one cycle more. And then we see this, again, the 8-week moving average. You see this price rises and then drops back down to this line, drop back down to this line until it broke it. So this was a double peak cycle where we went up really, really fast. And then we dropped for a few months. We did this sideways movement. And then we did another push really, really high. Again, every time you see those candles are almost touching that 8-week moving average. So this is math, and it's not 100% sure, but it helps you navigate this and see, okay, if it drops below this line, it's probably going to keep going until it finds its next level of support. And then you can gauge where the market's going based on what previous levels of support it found. So, the big question is like, what's, what the price of Bitcoin is going to be at the peak, and, when is it going to get there? And the answer is that I don't know. Nobody knows. If somebody tells you that they know, don't trust them because they don't know.
Wait, what if someone knows that they time travel?
Well, then
that's the only way
they should be
they
billion.
would know.
Yeah.
I wouldn't be surprised if there's a time machine already and someone's been doing time travel and we don't know. We won't be finding out in a couple of years.
If somebody that can travel is talking to me about where Bitcoin is gonna go, they're probably not time travelers.
True.
The other thing I was gonna ask before I got distracted with that, how did the stock market look like in March of last year when how like a lot of things were crashing? Like I was thinking, wait, was that like something similar to what happened in 2008 or 2009 when the stock market crashed or something like that? We hit recession. Was it?
I would, yeah, I
Or
would
was it
say
no?
no.
Like it was worse, but this time it was like something similar to back then. You know what I'm
It
saying?
was faster this time around. I wasn't in the markets back then, but I remember very clearly last year. I remember I sold most of my assets and that were in the stock market February 28th because I was buying a house and I was using that money for a down payment. And then like literally the next week, the market dropped like 30%, which is unreal. I
So
just got very lucky.
it was good that you sold by the end of February before it like.
Yeah, definitely. I got very lucky. I basically made all my money back because after I bought back in, I bought more of the stock that I had.
So the people that like bought when it was really low, like it was a good thing for them.
Oh yeah, because
I wish I would have done that. Like when we started like with the investing thing back in March when it was low, but I just recently started trying to like learn everything.
Yeah,
I mean it's always a good opportunity to invest.
Yeah, no, I mean, like just like previously Adrian said, hindsight is 2020 because we didn't know that this was gonna happen a year ago until it happened, and then now we're here. In those that took advantage, we're able to capitalize on those lower prices. But those that didn't, I mean, it all depends on how you deal with these situations in the moment. And there's gonna be more situations like this. This is not the last time the stock market is gonna crash or the last time the Bitcoin's gonna crash. We're gonna have several of those coming in the future because that's just how the economy is. It's just a cyclical movement going up and down, just like in a way, just exactly like J. Cole's new song, The Interlude. This thing could go up, this thing could go down, but anyway, you're gonna be prepared for it because if you're here on Mother's Day, you are gonna be prepared when this happens. So you'll have an idea exactly what to look at. You have pretty much how to look at Bitcoin, the trend lines, the support, and yeah, I mean, there is a bunch of stuff that could happen from today at the end of 2021. Maybe all of a sudden, the U.S. government says that they're gonna start incorporating Bitcoin as a currency, and that would shoot Bitcoin back. I mean, not back. You could shoot it all the way up to 100K and more without us having to look at these trend lines, just because of a big support by a big economy says that they're gonna do it. So all of this takes into consideration that we are just looking at a normal day trading environment. If something happens where Corona number 2 comes and everybody starts selling off their stock, then this could go all out the window. But at least you have an idea on how to deal with these situations.
Yeah. And Morris, I don't know if we have time, but there's 2 other tools I just wanted to go through.
Of course, yeah. I mean, if you guys want to stick, definitely we can keep going.
Okay, because these are kind of like the primary tools I use. I mean, the charts I show, they're good to know where like the weekly moves are going. But charts are more of a kind of like a macro perspective on Bitcoin. And we see the whole history of Bitcoin since it started trading. And this is a similar thing where we see the price go above this red line, which is a 200, what's that, 700. So that's a 2-year moving average. So the daily price for the past 2 years of Bitcoin. So we see every time it peaks, it has peaked above the red line, right? So 1, 2, 3, this is in 17, and now we're here. So we see that we haven't even touched that, right? So this is a good indicator to when people, oh, is this a peak? Look at this chart, and then we can give you a link for this. These are just public information. Look at the chart. If it's not above the line, the probability of the peak, of it being the peak, it's low, right? I'm not saying it's impossible, but it's a low. So if we zoom in over here into where we are now, and you also see an interesting thing is that the price itself, it hit the line or almost hit the line, and then it came back down and then did something similar right after that. But this line, because it's the past 20 or 730 days average, it keeps going up over time. So the longer it takes for us to get to the eventual peak, the higher the peak will be, right? So right now, if we look at this line, it's showing a peak of around $85,000. So if Bitcoin goes significantly above this line, say to $100,000, yeah, I would start considering, okay, that this might be it. This might be the end of this bull market. And then at that point, it may keep going higher, right? Because if you look back at these, the previous times that it went above this line, it was November, December, and even January, it was above the line. So this period where it goes above the red line could last a month, 2 months, who knows, right? But at this point, I'll be watching the market very closely because the peak might be near, right? That's when I'll start to really look at the crypto market with the intent of selling most of my assets at that point. And then the other thing is that you can also be selling your assets as it goes up just to take in some of your profits. That's always a good strategy as well. But the idea is that the market is going to crash. Crypto is going to crash. Bitcoin is going to crash. Ethereum is going to crash. It's going to happen, right? And it's good to look at these tools to be prepared for that crash, right? Because you don't want to be the guy that's buying up here and selling down here.
So you're saying that it crashes every 4 years or something about the 4-year peak?
Yeah. So every 4 to 5 years, there's this cycle, right? So the downturns, if you look at the charts, so the downturn, I mean, they last years, right? But these, whenever it goes from the low to the high, they're much faster. So from like here.
So you got to sell before it crashes. Is that what you're saying?
Yeah, exactly.
So like you sold yours before without knowing that COVID was going to happen, and then it was going to crash, and then a lot of people lost money.
Well, I was buying at that point. Going back to the previous cycle, right? If we go here, I saw this go up. I remember I was in a plane around on like December, the third week of December, and Bitcoin was around 15,000 when I boarded the plane. By the time I got home in Houston, it was already at 19,000. And I had this gut feeling, it's like, man, this is like going up way too fast. It can't be right. I didn't sell. So I rode all the way down to 4,000, those levels. what I did do, because usually, so when this happens, when Bitcoin peaks, it crashes down, and then a lot of the altcoins, so your Ethereum, Doge, all these other coins, they start going up after, because what happens is that money flows into Bitcoin first. So there's a lot of money there. Right now it's around $1 trillion, more than $1 trillion. And then it crashes. And then people are like, oh, it's crashing. I need to sell. And now people have all these money in exchanges and so on. And then they usually convert that into Ethereum, because at that point, Ethereum hasn't gone up that high. So what happens is that Bitcoin pumps, it crashes. And then after that, Ethereum starts going up. So Ethereum actually peaked in January of 2018. So Bitcoin in December, and then Ethereum about 2 to 3 weeks after that, which is similar to what we're seeing now. If you look at the Ethereum prices, over the past month, it's just crazy. Well, Bitcoin hasn't done anything. I mean, it crashed, 4 weeks ago, and after that, Bitcoin went crazy. So it's like this similar dynamic that happened there. But yeah, the idea is, you want, if you're holding onto crypto and then you want to take profits, you don't want to ride this wave down. Yeah, sell somewhere around here. You can go into this chart, and it's as simple. I mean, you're never gonna hit the absolute peak, but you can get close to it, right? So you can look at this chart and say, okay, we're still good. I can still hold on to my crypto. More than likely, it's not gonna go down.
I did realize that. I did notice that when Dogecoin was doing good, Coinbase wasn't doing like good. It was going like it wasn't red.
The stock itself,
Yeah.
I haven't paid attention to the Coinbase stock at all. I don't know.
Yeah, no. I have just like 2 or 3 stocks just to keep track of it, but yeah, I mean, since Coinbase is not really a correlation to like the price of Doge or these other cryptocurrencies, it's more like an exchange. It could move up if Bitcoin's going up. It could move down if cryptocurrencies in general are going down. But I doubt there's a big correlation between what Coinbase is stock doing, since that's a whole separate exchange and philosophy compared to what cryptocurrencies are. So I wouldn't look too much into what Coinbase stock and cryptocurrencies are doing. Yeah, it could be very different.
Yeah. But yeah, so that's one tool. It's called the 2-year moving average multiplier. The other one, and this is the last one I have for today. I mean, there's a lot of other tools that we can use. And for me, I don't use one single tool. I look at all these different charts and all these different metrics. And then based on that, I make a decision on where we at. Because not one model is going to tell exactly what the peak is going to be, where you are in the market. You kind of have to look at everything, and then based on that, make the best decision you can with the most data available for you. Getting into this called the stock to flow model. So this takes into account the supply growth reduction of Bitcoin to predict price, right? So, and the guy that initially did this is called Plan B. Very famous guy in the crypto world for coming up with this, or not coming up with this, because this applied to things like gold, silver, basically any commodity where it has a limited supply, right? To kind of predict or model the price. So he applied this model to Bitcoin, and we can see it's been holding up pretty straightforward or pretty well in terms of predicting the price. So the colors we see here, what they mean is days until next halving. So when it's red, it means the halving just happened, right? And then when it's like this, purple color, it's that the halving is about to happen. So what happens, we see here, usually the halving happens about a year and a half before the market starts going up, right? And then this brown line is basically the prediction that the model gives you based on the price history and also based on the reduction of the supply growth. And you can see here, if we go, okay, good. We can see that whoop. Sorry, guys. There we go. So we can see the dots, they're the actual price. And then, as I said, the brown line is the prediction. So you can see more or less it follows the brown line, not exactly. Again, no model is going to give you the exact data. But you can see that it trends that way, right? So this is where we are right now, $58,000. And the predicted price is around 80,000, 84,000, right? But one thing to note here is that every time we have these bull markets, we don't just go to the line and move right? We overshoot the line because people get hyped up about Bitcoin, about crypto, and everybody wants to buy, people that were hearing about it. And, even your grandma, whenever your grandma starts asking about Bitcoin, that's probably when you should sell. That's when it's overly hyped up. So you can see here, it happened here, it happened here, it happened here. We overshoot it. It even happened here, even though we're in like the middle of 2019, but it wasn't that significant because it didn't go past its previous all-time high. And then this is where we are. So we're still on pace to hit the line and potentially go above it, right? One of the things that if you notice, if you go back early on, you overshoot it a lot. So it goes up above the line a lot. And then as we get closer, it starts to follow the line a bit closer. And that's just due to the fact because it's a growing market with a higher market capitalization. And that gives it less volatility. So it takes less money to move the market either way, right? I mentioned before, you have to, dropping the market capitalization of something by $200 billion it's pretty hard. But back here, I think the market cap of Bitcoin was under $100 billion. So much easier to move. That's why you see more volatility, both to the upside, right, as well as to the downside. Mm-hmm. We see that we're tracking the stock to flow model a bit closer. I still think that it's going to overshoot it. My personal target for the price of Bitcoin, the peak, is at $160,000. I don't know when it will hit that, but I know it will happen in between 6 to 12 months from now, or even closer. I would say, between 3 to 12 months from now. But again, it could go as high as $300,000. It could go as low as, $60,000. I don't think. That's very that's a peak. But what I'm trying to say is that nothing's for sure, and then all these tools give you is the information to make the best possible decision based on what you know, and then that way you can make any trading or investment decisions. Yeah, I think that's it in terms of the tools. We can provide the links to these publicly available. I think with that, I'll just close it out. And then if you guys want, we can have another session in the future and do a bit more detail to some of these.
Perfect. Yeah, no, that's one thing that I want to do is make these once the stock game is done, which of course Cynthia is tearing it up. Once we are done with the stock game, if anybody would like to also keep attending these Sunday meetings, I'll leave it open. I'll leave it to a vote, but most likely I'll be meeting with Adrian and Christian and Nate and David and everybody else who are we actually have Telegram groups and Snapchats, or it's not a Snapchat, Instagrams groups where we talk and we say, hey, how's it going with this stock? How's it going with this coin? And we pretty much have this conversation. So if anybody we could make this a regular thing on Sundays. And I definitely thank Adrian for coming, for giving his time as well, for supporting this and to support you guys, because the main goal of this is to make you guys also be the next investors, because I think the Latinos need that. I think everybody needs to be invested in their financial future, And it shows me that you guys actually really care, because you guys could be out there tearing it up with your moms on a Sunday, on a Mother's Day, and you guys are still here. You know, that tells me a lot. And I'm actually gonna go to my mom's after this. But
Well, for me, we already celebrated Mother's Day. It's kind of like early. Well, I mean, like around noon. So we finished by like 5 because my sister left around that time.
oh, and then you're good. Then you're good, Jason. I
Yeah,
know for
'cause
me, I
we-
still have it.
We first started. We had cake and then we ate dinner. But then, after the cake, my sister left. So we usually eat and then have cake. But then we did cake first.
Yeah, no, I definitely, and I wish you all, you know, your mothers also a happy Mother's Day. And yeah, well, I'll leave it up to, like, I'll add Adrian to the IG group as well. So if you guys had any questions, you can ask him any questions there. But yeah, I mean, I'll leave this meeting up to this, and thank you, Adrian. I don't know if you have any other closing comments after this.
No, that's it. I mean, like you said, just feel free to send me a message, and I'll be happy to. I love helping people, especially with information and pointing them in the right direction, so they can, crypto in general has been great to me. So I want to be able to share the information so others can benefit from it as well. So feel free to message me, and I was happy to help. Thanks for
No, thank you, Adrian. And I'll add you to the IG group in case anybody has any questions as well after this. And I'll post this this meeting also. Let me stop recording.